I think it was FactSet this morning said the market right now, at least, is devoid of any meaningful catalysts. When does that change?
Well, it's very difficult. This season of the year with the holidays and whatever, Sarah mentioned earlier the Santa Claus rally. Years ago, the Santa Claus rally began after Christmas, and then each year it got pulled forward by the gurus and the pundits, and now we're talking right after Thanksgiving that the Santa Claus rally is looming. It's a little bit early for it, and in a more short-term perspective. Today, I think we've got a tug-of-war between short-term seasonality, and that is a mild upward bias for the day after Thanksgiving, and the fact that the yields are inching up higher. So that's pulling against the bulls, and the seasonality or the cyclicality are giving them a boost. So we'll see who wins out. I always favor the cyclicality. You know, they talk about things like muscle memory, and it goes on. And then we have all these mysteries to look at. You get the open AI with nobody on the board claiming any resolution. Many of the guys on the floor think that maybe it was the artificial intelligence itself. When asked what should we do with the company, they said fire the chairman, and that's how that wound up. Otherwise, it doesn't seem to be an explanation for it.
Yeah, it's a curious one, Art. So you always say watch yields, and that's been the story. We've seen this big move lower in yields on expectation that the Fed is done raising rates. The next move is going to be a cut. The market's going to get excited about a cut. I do wonder if there's a risk here that the market's too excited. If the Fed officials start to push back on that in the coming weeks, if we start to get inflationary numbers that aren't showing enough progress down to 2%, or do you think this time is different? Because in the past, in the battle between the Fed and the market, in this cycle, the Fed has been right.
No, well, I think that the Fed officials don't necessarily want to play Grinch, but they are being bothered by the fact that the market is getting more optimistic. The market observers are saying things like, well, you know, they're pretty well done. You see that in the projection of expectations. So it's there. I would be a little careful here. I would watch that yield on the 10-year. If it starts to move up above 4.5, above, say, 455, then that will raise a question as to whether you're going to have maybe an attempt to check out the former highs, not all the way up to 5%, a little too early for that. But if you start to move above 4.55, I think you get a little rethink, not only from the bonds, but they may put a little mild pressure on equities. So I would watch that. We may get another retest of the higher level in yields while all that Fed jabber is going on.
Finally, Art, we mentioned earlier this morning quite a bit of geopolitics in the mix, not just Israel, Hamas, but Argentina, now the Netherlands. I wonder how you think all of that squares with the VIX below 13, and whether or not you agree that, in the words of somebody today, that's absurdly low.
Well, that's not a bad phrase, I'm afraid. It's remarkable for what's going on geopolitically, and it seems like there is no sense of caution here, and we'll have to check it out. I always like to check out the near-term VIX and then take a look at where it is several months and maybe even a year out and see the differential. I'm going to keep an eye on that and see if it begins to pop up. But I think you are seeing a bit of right-wing populism showing up in country after country. And that may have a more than a narrow impact on the whole financial picture, not just on the stock market. So it is worthy of constant attention call, and it wouldn't be the first time in history that the VIX has fooled us. People have gotten a little over complacent more times than not. But then again, that's what keeps me in business.